Welcome to the Real Estate Equation Podcast. I'm Ian Mayer with I Am Home Inspections. I'm here with the lovely
Liz Bushman, the Bushman team of Academy Mortgage.
All right, Liz. So we hear a lot of loan terms thrown around. We want to decipher what some of these terms mean today. So first, what is meant when someone just says a conventional loan?
Conventional, just kind of like the word sounds, it's pretty standard. That type of loan is going to be what I would call a vanilla conservative borrower profile. Would be somebody who has a 700 plus credit score, who has considered stable employment history, as well as stable income, and possibly money in the bank for a large down payment. Now, 5% is the minimum on conventional, but for loan limits and loan sizes, they changed again for 2024. Did you hear?
No, I know. They've changed a lot. When I used to be in lending many years ago, conforming limit was like $445,000, I think, at the time.
So that was like back in the dark ages. No, just kidding. So yes, they continually have been rising year over year. So as of January 1, 2024, conforming conventional. So conventional is going to break it up into actually two different tiers based on high cost and regular cost. A regular cost would be a conforming. Okay. So those who are taking notes. So from $1 to $766,550. Okay. 1 to 76650. That is considered conforming. Now that's one unit. So one single family, one condo, one townhome, that's one unit. Now in San Bernardino, Riverside County, because we have some buyers, right? Mm-hmm. We have clients out that way. That's going to be the max. If we go above that number in LA or Orange County, LA and Orange County allow for what we call conventional high balance. Conventional high balance just means that there is an affordability gap, or you might want to call it, but it allows for higher loan limits to still be considered conventional. So anything $766,551 to $1,149,825 cuts. So conventional high balance will go all the way up to almost a little over 1.1 million, which is huge.
That blows my mind because I said when I was in lending, conventional was like 440, 445, maybe 450. I was definitely under 500.
Right. And these are for LA Orange County. So check your county loan limits, talk to a lender, because as far as underwriting goes, people ask me, well, how do these people buy, a $5 million house? Well, that goes into what we call a jumbo category, which is a different investor and money pool, as well as interest rates and underwriting guidelines.
Yeah, that's the next type of loan I was going to see. What is a jumbo loan?
Jumbo, big, like it says, jumbo. So jumbo is going to be anything that technically is $766,550,000, right? 550,000. So anything that number up. So even if you're in LA and Orange County, you can still get a jumbo loan, even if you qualify for conventional. Why they would do that is sometimes there's better interest rates. So when we're looking at, which loan types are better, it's not just one loan type per person. Some people qualify for multiple loan types, but jumbo is going to reach those maximum heights, and lenders will say, oh, we don't have any loan limits, because they will always make a call and figure out what the down payment needs to be, as well as underwriting guidelines to go along with it. So
jumbo loans are just bigger loans than conventional loans.
Big. Luxury homes, beachfront properties, you've seen them all. They're all on, they're what we all advertise, right?
Malibu, Beverly Hills, Bel Air, Hidden Hills, even parts of Woodland Hills, definitely. Yeah. Let's go the other direction. What is an FHA loan?
Ooh. So FHA, do you know what FHA stands for?
No.
Federal Housing Association. So FHA is government. FHA is ruled, you want to call it, or mandated by HUD. Everyone knows what HUD is, right? Housing of Urban Development. So HUD is the HUD secretary is appointed by the president, whoever was in charge at the time. It's a government loan. Now, HUD was established right after the Great Depression to bring back affordable housing and housing standards. So things like running water. We take things like city hookups, minimum property standards. FHA set the rules on what is considered health and safety and habitable. So giving a little history on why we have FHA, it's almost coming up to its 100-year anniversary. So keep a lookout for that. But FHA's dream and its vision was to allow folks to qualify for those that could not qualify for conventional lending. So you're looking at somebody that has less than 700 FICO, may have less than the minimum required down payment for conventional. So it does allow 3.5%. That is 3.5%, actually all the way up to $1 million. The conforming loan limit and the high balance loan limit. So you can actually purchase a house 3.5% down with FHA and have a loan be $1,149,825. Think about the mortgage payment there. But what they do is they take an insurance policy from HUD. And they wrap it in. It's considered an all-inclusive insurance policy against folks falling behind and defaulting on their mortgages.
Mm-hmm. So FHA loans typically are a good way for people who maybe not have the down payment or the FICO score to still be able to buy a house.
Absolutely.
Now let's talk about the last one, VA loans. What is a VA loan?
VA. So the Department of Veterans Administration. That's the legal, what we always call it VA, right? Mm-hmm. So if you are active duty or retired and have discharged honorably, you can qualify for home loan benefits through VA, the Department of VA. Some of the bennies, why people do that is because it's zero down. So 100% financed.
Zero down.
Wow. And did you know that it was January of 2020, they announced a new regulation that have no loan limits. So if you qualify for the VA program, now there are different underwriting guidelines. So underwriting guidelines would be residual income. We do a calculation to make sure that after you've paid your bills, you still have enough money to eat and live and for your residuals. But it's not a standard debt to income underwriting guideline. So most people don't know that. So once we do that calculation, if you pass the residual income test, you could buy a $2 million home at zero down.
That's amazing.
I know. It's crazy. So I've actually done a couple $1 million VA loans, zero down, because, you might go, oh, well, that must be a very high ranking official in our military to be able to afford that payment. But they've been discharged and they have a civilian job, a good paying civilian job, and they can afford it.
All right. Follow-up question I get a lot from agents. Right here, agents say, should a seller be afraid of a VA loan?
No. First of all, I'm a big advocate of you don't let fear stop you from, determining your goals. But fear, it's interesting. Sellers should not be afraid of FHA or VA buyers. We're giving an opportunity to obviously treat the new home buyers coming in. You've got discriminatory factors, you got all those things. So let's put that all aside. Let me ask you, why should they treat it any different?
I don't no, I don't think I would fear one if I were selling a house, but sometimes I hear agents talk about, well, my seller doesn't want to take a VA or an FHA loan. They only want conventional loans.
I think it's knowledge. I really think that if they took a look at the loan is still underwritten, the loan is still approved. It shouldn't matter what type of loan program they have. I think the myth and the stereotype out there is that with conventional loans, they may have more money to put into escrow, such as if the appraiser appraised the home and it didn't come in at contract price, then the conventional buyer might have a little bit more funds in the bank because they're not doing a 0 down or 3.5% down. Then that may not be qualified. But at the end of the day, and I'm going to stay true to this, at the end of the day, an FHA and VA buyer is just as qualified to purchase that house as the conventional loan, if sometimes not more, because they've gone through an additional layer of underwriting. Also, sellers, if they're going to put their house on the market, there are minimum property standards for FHA and VA. LA, what's the average age of a house?
Approximately 1972.
Okay. So now we're talking possible lead-based paint. So FHA and VA are going to make sure that the house is ridden of any lead-based paint, any hazards to the property. I think agents get a little worried.
It's usually peeling paint what they're interested in. They don't want peeling paint.
Yep. There is an expense. You have to scrape it twice. Or scrape it and then repaint it twice. I'm not a contractor, but I have seen FHA appraisers come back with repairs, and they have to have a cost to cure that go along with it. So we can't ask for, the house to be redone, in a new manner, but it has to be livable. It has to be habitable.
All right. So that one question we get on the inspection side is the borrower has an FHA loan or VA loan, they need a special inspection. And that is not true. It does not actually change the home inspection. They do need a special appraisal. And the appraisal, as you mentioned, has a few things that sort of overlap with home inspections, but really they don't. I've been on homes where they were doing a VA appraisal, and they're looking basically for any peeling paint. But when they test for hot water, they literally just need hot water at one sink in the house. They really don't care if there's hot water at all the sinks, whereas as a home inspector, we would test all of the sinks, and we would look at the hot water heater and the whole system as a whole. They only basically care if there's just hot water one sink. Yeah. And they only just care if there is a heating source in the house that will raise the house up to 50 degrees, which is kind of funny here in Los Angeles because how often does it ever get colder than 50 degrees?
Right now.
But they don't care really if the heater is in great shape or what kind of heating system it is. They only look at very basic. So sometimes we get people saying, well, I don't need your home inspection. My VA appraiser is going to do the inspection. No, your VA appraiser is going to do a little more of an appraisal that's going to have a few overlaps, but it's going to be very, very minor overlap compared to a home inspection, which is going to go much more detailed. But you do not need a special inspection. You need a special appraisal, but you still need your inspection for your own piece of knowledge and to understand the conditions of the home.
That's correct. So your lender will order the FHA or VA appraisal, just like they would order the conventional. The certified appraiser does have, let's just say we can't just send anybody out there. They have to go through the process of the Bureau of Real Estate Appraisals to be certified in order to do and execute an FHA or VA appraisal. So we do have our specialists out there. They know what to look for because the property must be insured. What people don't realize is that after you fund a loan and the homeowner moves in, that home is now HUD approved on FHA. On VA, it's the same. It's now VA approved. So what happens if a borrower defaults, right? We've heard a lot about defaulting lately, foreclosures. What, are we heading up into a market soon where we have high foreclosure rates? But if we dial back to 2008, 9, 10, 11, where we had a lot of homes that were put back on the market because FHA borrowers defaulted and lost their homes and foreclosed, either the bank took it back or HUD took it back and put it on their websites and resold it as a HUD approved home. So if you do have an FHA borrower, and know that an extra added benefit is that once you fund an FHA loan, the home is now FHA, HUD approved. Now, condos, just to kind of get an idea here, FHA and VA also have to approve condominiums, townhomes, anything that has that HOA type of community, as long as it has an attached wall. So that creates an added risk when you have attached walls and communities such as land use, such as townhomes and condos. So as a buyer and a seller, you want to make sure that you're looking at HOA approved, FHA and VA approved HOAs. And if you're a seller, for your resale value, to get as many buyers in as possible, talk to your HOA board and make sure your complex is on the FHA and VA approved list. So that when you resell the home, your townhome, when you resell your condo and townhome, you can take a look at all buyers' offers and not just conventional.
All right. Well, I hope you learned something today. This is Ian with the Real Estate Equation Podcast. I'm with I Am Home Inspections that matter for people who care. 818-298-3405.
And I am Liz Bushman with the Bushman team of Academy Mortgage, celebrating my 25 years experience in the business this May. Woohoo! And our service is the difference. Come check me out at www.academymortgage.com/Liz Bushman, or reach out to me at 714-478-7920. Thanks for watching and listening. Don't forget to
like and subscribe.
That's right.